Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 1st of June, a new month here in 2021. And even though it's a new month, we are just shy of a new all-time high. And this uptrend continues, at least, well, splitting hairs here, but just a little bit shy of that high. This is the S&P futures. In tonight's update, it won't be that much different than what we had Thursday, which was still this volatility box or this rectangle. We can see it here on the daily chart or on the hourly chart, which looks a little bit like that. So it's this concept of low to high to low. The next move of the market should be to the downside, but that's just a probability game. It is not a prediction. But the trades are going to come from the short side. And that is, again, unchanged from last week. We did have the Memorial Day holiday, so Monday was a holiday in the market. But as you can see, we were massively unchanged, except for one product, two products actually. The products were the Russell, and that just continues this sideways trading range, which is no surprise. That range, roughly speaking, is about 2125 all the way to about 2300. We can see the pivot here, and maybe a little bit more to go to pivot. Pivot just means reverse or trade down from in the current session. We did see an overshoot in March, and that took the Russell to new highs. But right now, we're still looking at this volatility box, which again, you can think of it like a rectangle or just like a box. It doesn't have to be complicated, more complicated than that. The fair valuation or the midpoint, think about that as fair value. Here's how I look at short-term markets and trade. That's what the Russell is worth. And it's fairly valued about 22, again, about 25. Now, if it goes up to 2,300, that is considered above fair value, or you might want to call that overpriced, or even overbought, or expensive. All those terms mean the same thing. And when the Russell dips to around 2150, which is right here, that could be considered under or beneath fair value, underpriced, or inexpensive. Again, these are all concepts, and that's where we're looking at for this volatility box. So again, we're looking for this week to be a little more to the downside, and the alternate thesis is that we just keep going, but that is a lower probability event. The market has, again, splitting hairs, very close to a new all-time high, but we always want to take a look beneath the market, and we'll do that in a moment. But first, we're looking at crude oil, which made a new high. Remember, crude oil tends to track with the equity market, and they are economically sensitive commodities, or seeing a positive correlation, because what is good for the economy is good for crude oil, and it's good for the stock market. And if the economy is doing poorly, crude oil and travel and shipping and different things like that will be down as well. Now, this is a moment where the S&P, at least the market, is making not a new all-time high, but the crude or the commodity is. There are other commodities making similar new rallies or similar uptrends. That includes corn, and the list goes on, but obviously lumber futures and different commodities like that, which is inflationary. That's our big concern and the big conversation piece at the moment. Well, crude oil making a new high, breaking above 67. That is not a new all-time high, but it is a new significant high. And that takes us back to levels not seen since 2018. And that was around 70 to 75 and 80 per barrel. Should the market continue through these open air zones, then 75 is not that far away from the current price. And that will be into the future, not exactly this week. Nevertheless, crude is in its own sideways trading range from about 50 to 70. And again, notwithstanding the coronavirus and a little push to the upside in 2018. And that pulled the energy sector a little bit more bullishly. And that itself made not new all-time highs, because the energy sector is a little weaker in the grand scheme of things. So is crude oil. What did get close today was, yes it did, was the financial sector. So XLF and financial stocks still fade-worthy, played to a new all-time high. I want to double check that. Yes, it did come down, so it actually was a little bit negative from the high, and we saw a positive advance, but financials and generally, financial stocks, we'll see some of those in a moment, Goldman Sachs as part of it, did gap to the upside. Technology remains a little bit weak, and some of the other sectors were a little bit in play today. But the focus was on energy in today's session, crude oil, and surprisingly, the Russell, which was very, very strong in today's session. That's on the back of some other stocks, small caps like GameStop, which, if we're looking at this on a very short-term basis, did catch a bid, or at least is trading bullishly in today's session. As strange as that might sound, in the Russell, GameStop is right here. So we don't have the same level of domination of the mantras of tech, Amazon, Microsoft, Apple, Facebook, Google, and Tesla, as we do in the S&P 500, or of course, the Nasdaq 100 or the Nasdaq index. The Russell doesn't do that. But stocks like GameStop or others, for example, Plug, Run, Fate. We won't look too much at all of these, but the bigger the box, DAR, D-A-R, the bigger the box, the more it influences the index. The Russell does not have the same components or the same type of market cap weighting influence of the Nasdaq, but nevertheless, it was the strongest of the indices in today's session. And there's the Russell as it trades in its own little trend day to the upside today, playing back into the top of the volatility box. What we want to look at now is this concept of strong stocks getting stronger. And if we're seeing a lot of stocks make new highs with the market, or at least front run the market, that's a good sign that the market, S&P in this case, will probably make new highs. So we still have this rising trend, we still have the bull market continuing, but are main stocks participating? The answer is yes. Right now, this is the stocks in today's session making new 52-week highs, and I sort them by market cap. The list goes on to 72 names. This is a stock scan that looks at new 52-week highs. Top of the list is JP Morgan. Behind that is Nvidia, Bank of America, Pepsi. Didn't see that one coming, but PepsiCo, little beverage company, popular drink, made a new 52-week high. Behind that is Morgan Stanley, Citigroup, Honeywell, and the list goes on. And these might be stocks you'd expect. They are financial names. The XLF made a new high. A large number, decent number, of financial companies joined at new highs. So again, we won't look at all of them, but we'll pull out a few. And how we'll look at them is this concept of strong stocks getting stronger. And the logic is to buy the pullbacks, not the all-time high, but the pullback. And that just manages risk. A pullback would look like this. Stocks don't go straight up, they trade higher. They pull back. That's a pullback right here. They go up, they trade lower. That is a pullback. This is an upswing in the prevailing trend. That is a higher high, higher low. This is a downswing. That will be considered a pullback, or as I like to call it in the videos, a rubber band snapback. And that is snapping it back to the moving averages. That generates a buy. Generates a buy on these pullbacks. But again, that short-term type of trading is not necessarily a long-term plays. Nevertheless, the pullback trade strategy is in play, in motion, and that just generated two different flags. That's what we're looking at. Don't buy new all-time highs. That doesn't work out that well. But wait for the pullback. Other stocks playing alongside would include Nvidia. That is one that's splitting. There is a news event, plus there was an earnings event. So Nvidia is a little bit different than the others. Nevertheless, it's not a financial company, but it's at those highs. And by the way, these may not necessarily be all-time highs. I look at stocks for the swing trade perspective from the daily chart over to the hourly chart. If you are curious about what's making all-time highs, you might want to pull the daily chart up with a weekly or maybe even a monthly chart. PepsiCo is next. Not that impressive because PepsiCo is more of a consumer staple. You drink Pepsi in recessions or Coca-Cola, and you drink it in expansions. It's nothing to do with the expansion of the economy like would be in travel or hotels or leisure stocks. Pepsi is a beverage stock that is considered a consumer staple, which is not really thrilling, but has consistent gains over the years. Same with Coca-Cola. But Morgan Stanley is a financial stock that is getting stronger, and is continuing its uptrend. The immediate play remains to the short side or the downside, just for a pullback or a rubber band. But if you want to be patient, let that play out, and then try to join the uptrend with pullbacks or retracements. And the others would include Citigroup, Honeywell, which is not necessarily a financial company, and others. As always, be careful and safe. We're continuing higher. We're a shy move away from all-time highs. And this week, potentially, higher probability at least, plays to the downside rather than the upside. But we've been part of this uptrend and these continuation moves for a very long time. It would not be surprising to see it occur again. This is Corey Rosenblum with tonight's Theo video update for June the 1st, 2021.